Federal tax cuts made during the Trump administration are set to expire in 2025, and it could mean hefty increases in federal taxes here in Connecticut, according to a recent study conducted by the Tax Foundation. If the cuts are allowed to fully expire at the end of next year, it would mean federal tax burden increases of at least $2,200 in the state's lower income districts and up to $7,100 in the highest income districts. The average tax increase would be around $3,300 across the board. President Joe Biden has signaled he will let the tax cuts expire, saying they benefited corporations and added trillions to the national debt. But officials in his administration walked back some of those comments to say that Biden's budget would only let the tax cuts expire for corporations and those making over $400,000 a year. According to President Biden's budget fact sheet, Biden would extend all middle-class tax cuts and says he will pay for those tax cut extensions through additional reforms to make wealthy and corporations pay their fair share. That includes eliminating some tax loopholes for corporations, raising their tax rates, and increasing the top rate for individuals and married couples making more than $450,000 per year from 37% to 39.6%. The Nonpartisan Congressional Budget Office released a report in May that found extending the cuts through 2034 would add $3.5 trillion to the national debt. The Tax Foundation also estimates that maintaining the cuts, which they estimate would cost $3.8 trillion over 10 years, could increase job creation by 904,000 across the country. You can read more about this at InsideInvestigator.org.